It appears as though we have found a floor and price essentially started its reversion back to the 590 zone, aka the mean. We have quite the tricky ride up, but I believe we have found the play for the coming sessions. Let's go ahead and review that session now. Welcome back to the channel on this Hump Day Wednesday. This is ARCa. Let's dive into ticker symbol FNGR. What is up, you guys? Thank you so much for stopping by once again. Let's go ahead and dive in to FNGR. And I do have to tell you, man, that this is really interesting because I am recording this. I'm filming this for the second time. I am filming it for the second time. Now, why is ARCa filming this for the second time? Well, because the microphone was off. Yes, it was off. So we're gonna go ahead and repeat the entire thing right now as deja vu just happened. There was a glitch in the Matrix, team. A glitch in the Matrix has happened. But let's dive in. All right. So I'm going to lose my mind right now, right? So so the floor that we spoke about just yesterday, right? I did say 415, but some dyslexia happened and we hit 451. No, I'm just kidding. I really did say 415. It appears as though we actually got that support back down from the regression here from that descending broadening wedge that we have been tracking for some time, right? So from that bounce, we actually did get a nice 22 spot, 16% to the upside, right, in recovery at the highest point today, all right? From the so it looks like we actually faced a downside here that was consistent to around 37.5%. All right, so everything is good, but don't be fooled by that, right? Mathematics play a lot differently when you come back up, okay? So yes, we did lose 37%, but that does not mean that 37% up will be recovery. In fact, 37% up will lead to a target right here. Check it out. Right there, because numbers, right? That would be $6.19 if we did revert back the 37% that we lost, right? So, in fact, in order for us to get back to the area where we came from, that would be a 60% reversion, right? So if we can do that, that'd be amazing, right? But what I'm actually showing you here is exactly why it's sometimes. If you don't cut some losses on the way down or slow the rate of loss down, right, it can introduce a high speed loss, and then coming back up, it's going to be, pretty much twice the ride. But it's okay. Everything is looking not bad. So I can already see that price action wants to come back down to validate some type of support, and that support would be what? The $5 target, in fact, right? So I can see right down here in this the last 4-hour candle, wick low located at about 501. So that would naturally be one of those spaces to kind of observe price action or observe a potential bounce zone, right? So the range that I'm putting out here would be 501 to 508. And in fact, that 501 was also shared by this candle here back in September 27th, Wednesday. It looks like it was the opening. Or actually, it was right around 9 a.m. So lunchtime NYSC, right? So, this candle here ended up bouncing from that $5 zone. In fact, this had a 502 bottom, right? So this was the last candle before facing that massive upside right there, right? So yes, it does have this 501 does rhyme pretty nicely all across here. Right, so good, very well. And also something to validate that downside that I'm looking for is actually this. Please notice here that we do have a 4-hour bearish engulfing, right? So this definitely printed, and it's not only just a bearish engulfing, it is a bearish buy formation, right? So please remember that statement that I just said, that little sentence, a buy formation, that's actually not something that exists in the trade. It is something of a strategy that I've put together myself, right? It's combining two bearish or two bullish candles or one candle with a bullish formation of candles, right? In this case, you can see here that we have a pretty nice evening star, right? I wish this were a little bit higher, right, beyond this prior candle, but still it's a pretty bearish candle. And that paired with a bearish engulfing where the forward candle engulfs the prior candle entirely with its red body, right? So that would be in body, right? Not the wick, body. So that would be my a bearish buy formation setup here. Now, while both of these don't have a mathematical property, and they also don't have a price objective based on the strategies alone or together, I can only speculate what the downside is going to be, right? So in this case, I can honestly see that we may be in the process of touching down at this 501 to 508 area, right? Because I see this as the most pertinent support zone. In fact, we can find it. We can find a small bounce here at 516, right, to potentially validate the resistance of today's close, right, and then we can actually continue on to the downside. Today's post-market close, that is. Okay, so another thing to kind of notice here is that, yes, the 4-hour time frame has, resisted from both the SMA 200 and the SMA 50. I spoke about this live today. They were asking me if FNGR can reach $7 today. I said that I replied with the 4-hour SMA 200 and SMA 50 are very powerful. We need to combat those first, and then we can actually move onwards, right? But yeah, it's just part of the game, right? And yeah, we're getting a little bit of an inverse silver cross here, right? So we're getting that EMA 21 to cross beneath the EMA 55. That's naturally bearish, right, team? So yeah, let's go ahead and move on to the next chart here and see if we have anything else to validate that potential short-term downside before a recovery, right? So actually, you know what? I can talk about this right now, right? So this was something that I drew actually in the in the last video that I recorded, right? I just wanted to show you here. I had never seen that before, right, like this. But yeah, this regression connects very nicely to the resistance and support conversion of these candles here, and that would honestly, present a bullish case here. And the importance behind this is pretty great. And the reason why I say this is because in one day, 19 hours, we're going to be getting this. We're going to be getting this weekly closure, which would essentially put FNGR to an upside trajectory. If this candle, this present weekly candle, closes anywhere upside of the previous opening candle, right? So right here at the opening value of this candle would be $5.11. We're sitting at $5.44 presently, right? So closing anywhere upside of that 5.11 would be a bullish statement, and that would encourage the upside continuation for our ticker FNGR. Okay, so let's go ahead and now take a look at the not the enhanced MACD. I want to go ahead and look at trend line, right? So this is that magical indicator, right, that displays to you the formation that you're currently in, and also has MACD built in to the price action, right? So instead of viewing MACD in this form here, you can actually observe the colors directly onto the price action, right? So you can go ahead and see that right down here, we were in critical red, right? We're here in green, right? We're in green right there, right? So yeah, it's just another clever way to display momentum within a formation thesis, right? So this is very nice, and it does give you pivot points too, usually before they happen. So for example, here, right? So you got this weekly print of your previous low, right? So this pivot point, or the pivot low here, would actually print, and then guess what? Bam, you got this massive upside, right? So similar situation here, right? So this was your pivot high, and from this point here, we ended up getting this signal to print, and then we got that massive downside, right? So very similar here too, right? So it printed it right at the top and then suggested for this thing to actually revert from those points. So it does have its accuracy. So this is part of the ARQ series algorithms that we just released. Please go ahead and get in touch with us at arqindicators@gmail.com so you can get your hands on these indicators, right, team? So let's go ahead and now move on to the next chart here and see what we have. So 15-minute time frame is actually suggesting a pullback too. We have a resistance from that SMA 10. This is the 10-day simple moving average acting as resistance and a potential guide towards the downside. So the minimum downside we can get here would be around 518 in respects to the SMA 50, right? This is the 50-day simple moving average within the 15-minute time frame. So all of these things are actually going to be things that you're going to be learning on the ARC Masters course, right? So first of all, somebody pointed out an ascending triangle today, and I do have to give him or her credibility. I forget whose name it was, so please go ahead and let me know in the chat, and I shall pin your comment. And in the comments below, sorry, please let me know in the comment. I'm usually saying the chat because, we're always streaming live here, right, team? So yeah, please let me know in the comments below who that was. I'll make sure to pin you and throw out some shout outs here. Thank you so much for that. And yeah, I would say it's a little jagged, a little forced, but definitely there. Right, so, and I would not call it out if it was too forced, but yeah, looking like a 15-minute to 30 or hourly time frame ascending triangle, a bullish formation after this downtrend here with converging price, but particularly with maintaining horizontal top here with a regression on the higher lows. Right, so this is introducing a potential downside here to the SMA 50. So, but yeah, this is formation theory, candle theory, mathematical concepts, aspects of psychology. All of that stuff is going to be introduced to you in the ARC Masters course. Now, please remember that I've only opened up 30 spaces, 30 seats for this, as it is actually filling up pretty nicely. There's already, I think, 11 to 12 seats taken on, let's see, over the span of around 3 days. So go ahead and get in touch with me and make sure to get enrolled here, and I'll pass you all the details as soon as you do send me an email, right, team? So let's go ahead and move on to the next chart here. Well, I guess if you want to know here, the topside targets based on this formation here, as soon as we do get another touch of the support zone down here. And another curious thing is actually I had this support already drawn here, 508 to 501. And that was apart from me drawing this support here. So in fact, in the last, in the video that I just messed up recording on, right, I actually drew this as a new discretionary low using the 501 from the previous candle and, of course, the 508 from other candles here, right? Lots of confluent targets there. So, yeah, I found it pretty neat that I was able to identify that in a discretionary manner, too. Twice, right? So let's go ahead and now touch on the ascending channel here, because this is the ABCD strategy that we identified just yesterday based on that massive sell-off. And I guess this can also introduce a potential downside too, right? The simple fact that we have bi-daily bearish engulfing printed right here too, right? So that's also introducing a potential downside here. And I would have to say that it would be a very limited downside too, team. There are very powerful supports below us, and I do believe that we can use those to our advantage or to the bull's advantage, right? So in this case, we must identify when that short play is in, when that long play is in, right? So in this case here, you can see this regression, very, very healthy regression here on the bi-daily time frame, and you can see that at this crossing point here, that would be the lower end of the range, right? So in case price action or the sentiment in overall wants to come back and validate that support conversion of this regression here, then that would be the zone to kind of look out for, right? So the total range now is actually 488 based on this regression to $5.08 with a focus, of course, at that 501. Okay, team, so that is what I'm looking at for now. Now, another thing to give us this potential downside, remember, I'm talking about a potential downside here, and it's very short-lived. Before I don't know the deep pockets of some whales, right? I don't know how that goes, but I can go ahead and just show you what the potentials are. This is the daily time frame Gaussian band, and usually what happens when we, break outside of a key resistance, being the mean band here, we would then actually face a pullback, right? So then that pullback is to validate the conversion of the mean into a support. And guess where that mean is located? Take a look to the right. That's right, located at $5. All right, team. So that is currently what I'm looking at here. And then, of course, we would revert back to around the 540 area to combat it. We definitely need to combat the area of 540 to 549 in order for us to continue to the upside to face the area of 589. Now, why is that so particular? 589, the very top of this Gaussian band. Well, if we come back here, and you know what? I think I can actually do it right here. Yep, take a look at that. The reversion variant has the mean of the Bollinger Bands right at 590. Nice. All right, team, so we have an entire play set out right here. I'm not sure that we can see the 590 by tomorrow, but there is a strong possibility. Anything can happen in the markets, as you can see, right? So But yeah, team, I do see that we had that very nice touch of B here, right? So where we identified the A, B, C, D, this is X. We got that A touch right here that would give way to the B. And B right here is giving way to C, right? So see, now we're well on that way to the upside. Let's go ahead and see if we can actually get that top side though, right? So it's going to be a very tough, very tough trek to the upside, like I've said before, but not impossible. Right, so let's just go ahead and observe the price action. Remember, I'm going to be streaming here at, today I was a little late because of my son having a little bit of trouble in the morning, all right? But I suspect that he should be good for tomorrow, and we should be back on the roll, and that should be starting the stream at about 6:40 or 6:50 a.m. to 10 a.m. Pacific time. Okay, team, so we still have, take a look at this, 30-minute time frame downside pivot in the immediate short term, validating our downside thesis. Bi-hourly time frame in the gravitational zone, potential downside there. We have a downside here on that 3-hour time frame as well. Yeah, same thing here on the 12-hour. And it looks like the daily is trying to get a little bit of a push to the upside here. And it looks like it may actually succeed it. Although it's still at resistance, right? So we still have the shot here of creating this resistance at the gravitational zone. In the bull weakness percentile, we'll get that pullback here, which would then have the bi-daily time frame complete its downside, face the support from the gravitational zone, just like it did here and just like it did here, right? And then we would actually move onwards and upwards, right? So the 3-day time frame right up here, I suspect that to be the 542 to 549 resistance, okay? Same situation here with the 5-day time frame, right? I do think that this is a little more consolidation because it's waiting for the immediate short-term time frame to kind of pressure the price upward or downward, right, team? So, yeah, I think that's a pretty good place here to just move onwards. But I would I'm sorry, I actually would appreciate whoever spoke of that. This ascending triangle to speak up in the comments. I shall highlight you. Okay, please take whatever I do show and iterate within these videos as just a form of entertainment, as I cannot suggest for you to buy, sell, or hold any assets whatsoever. Never, 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 never. I need you to do your own due diligence and everything will be cool. But with that said, team, I wish you well, a very good rest of your night, and I will catch you at the bell mañana. Adios. You thought I forgot, huh?